Miss Avani Bhatt, Senior Vice President at JM Financials. Ma'am, a very good morning to you. I just want to begin by asking, the kind of correction that we saw last week, we have seen, Nifty coming off from one of its worst weekly declines. On Friday, the markets made a good bit of a bounce back, breaking out of its 6-day losing streak. Is it still a sell on rise sort of a market? What are you making of the market at this current juncture?
Good morning, Suyash, and good morning to all the viewers as well. So last week we had discussed that the previous swing low of 19,333, if it is broken, then we are heading towards 18,850. Now that has been tested, but if you see the options built up, the resistance level has come down to 19,200 to 250 area. So yes, it's a sell on rise market. The major resistance now being 19,200 to 250. So on the upside, if you see, there are multiple resistances. Once 250 level is crossed, then again there's a lot of resistance around the 19,400 mark. So between 19,250 to 19,400, if at all Nifty moves up to that level, it's a sell on rise market. On the downside, 18,800 should hold on, and for the time being, that's for a very short term. But bottoming out should be done only somewhere around 18,550 to 18,600. So we need to be prepared for lower levels. It's a sell on rise market.
All right, it's a sell on rise market. The momentum will favor bears, as Avni is pointing out. Now, Avni, also between Bank Nifty and Nifty, Bank Nifty has been a major laggard. I think it's, it did see a bounce back of about 500 odd points on Monday. This morning, I can see it's also trading, with heavy losses of about 0.5% lower. Do you think that, Bank Nifty can perhaps continue its underperformance, over the next couple of weeks, given the kind of cues that we are seeing and this higher for longer narrative that's playing out in the US?
Yes, Suyash, exactly what I wanted to say. You pointed out that Bank Nifty is going to be the spoil sport in this entire scheme of things. And we should be seeing Bank Nifty heading towards around 41,000 level. On the upside, again, there are a lot of multiple resistances. 43,100 to 200 area being the first resistance point. And above that, now for this entire month, as well as for the weekly expiry, we are seeing a lot of open interest built up, call writing positions at 43,500 strike. So that is going to be another hurdle area, which is going to be very difficult to surpass in a very short time. So be prepared for around 41,000 to 41,500 levels. And on the upside, 43,500 will be the point above which, if Bank Nifty moves, only then we can say that we are out of the woods. Otherwise, even Bank Nifty, it's a sell on rise.
Hi Avni, Amit here. Short one, between the three, Nifty, Nifty mid cap and Nifty small cap, it is the Nifty small cap that has shown some resilience to the market falls. Do you think there are some legs left to this rally for the broader markets?
So if you look at the small cap index, the kind of churning that we had seen from April onwards till in last 2-3 months, in last 1.5 months, we are not seeing that kind of churning. Yes, it has held on to its gains, but it's not moving up much. The upward rally has stopped. So I think that the party that was going on in the small caps and mid caps has stopped. There is distribution going on at higher levels. It's just about time when we see a breakdown in these two indices also, the mid cap and the small cap index.
Now, Avni, we are in the thick of the earnings season, and index heavyweight Reliance Industries, came out with its September quarter print after the market hours, so the market did not get much time to react to it. We'll get to the stock, but Amit, can you, break down the numbers for us?
Okay, yeah. So, Reliance Industries have reported close to 27% rise in consolidated profits. They stand at 17,394 crores compared to 13,656 crores the same quarter last year. This is despite a dip in revenue from oil to chemical businesses. Reliance Retail and Jio Telecom have been the primary growth drivers for Reliance Industries this quarter. Reliance growth from oil to chemical business remained muted, largely due to fall in the crude oil prices globally. Investments in sports also seems to be paying off in their ventures. Revenue is up for Reliance Industries. Revenue is up 11.44% at 2,31,886 crores versus 2,07,559 crores the same quarter last year. EBITDA is up 7.54% at 40,968 crores. This is up from 38,093 crores the same quarter last year. EBITDA margins rose marginally, declined marginally to 17.66% versus 18.35% last year. Same. Reliance Retail's consumer electronics business maintained its primary growth momentum at 11% over last year. The fashion and lifestyle businesses delivered 32% growth year on year. Reliance Retail has said that it expanded its store network with 471 new stores, taking the total count to 18,650 with an area of 71.5 million square feet.
Wow.
That's their store count. The big one is here. The data usage on Jio network continued to surge and surge like how? Along with the subscriber addition. Engagement, now here's the kicker. Engagement on Jio network remained strong with an addition of over 3 exabytes of data traffic for the second successive quarter.
Wow.
Now I'll just give you a perspective. What is an exabyte?
Right.
An exabyte is 1 billion gigabytes. And if you talk to scientific researchers, they say all the words that have been spoken by mankind equal to 5 exabytes. So they have increased 3 exabytes on 2 quarters continuously. Jio added its 11.1 million subscribers to its subscriber base this quarter. Now, they have the rise in interest rates has increased the finance costs of the conglomerate. That's what they have opined. The company said that its finance costs increased by 25.8% year on year to 5,731 crores, primarily due to higher interest rates and currency depreciation. RIL said the depreciation cost, the loss of value over time of assets owned by the company, increased 29.4% year on year to 12,585 crores on an expanded asset base across all its businesses. So that's just a lowdown on Reliance this thing. Good results, a little mute on margins.
Good results, muted margins. I mean, I'm looking at the retail business numbers, healthy set of numbers over there, while the telecom business continues to grow stably. I mean, Avani, coming back to you, the stock is trading about 1.3% higher this morning. However, I was also looking at the year-to-date returns is down about 11%. And I mean, in the last 2 years also, the stock has not really given much, returns to its investors, has been pretty much range bound in that 600 point range of 2,000 to 2,600. Can we finally see the stock break out?
As far as Reliance is concerned, it has not performed in a good market, and the results are good. So it may probably hold on to the trend, as in it will not fall much, but moving up looks a little difficult. There's a lot of call writing positions at 2,300 and 2,400 strikes. So going by the options data, I think it's going to be a range bound session for Reliance. But yes, 2,200 is a very, very important support level, a very good support level. So given that, say, suppose if we see Nifty coming down to around 18,600 level, we will see Reliance coming down to around 22 to 2220 levels. Those are the levels when I would turn a buyer in the stock, and it may take some time to move up. It may spend some time consolidating in the range of 2,200 to 2,400. But yes, at 2,200 levels, I'll be a buyer.
Now, Avani, Maruti also came out with a healthy set of numbers. I think the strongest quarterly growth as far as volume, sales and profit figures are concerned. The stock also on Friday, surged as much as 4% to touch a 52-week high, but trading with a cut of about 2 to 2.3% this morning. What gives?
So most of the result outcome was, I think, included in the price. It was already there. And that's why we are seeing some kind of profit booking in the stock once the results are out. But the stock is on a solid uptrend, and I don't see the stock going below around 10,150 to 200. So it's a buy on dips. 10,200 will be a good level to enter. All those who have missed the rally can enter again at around 10,200 level, keeping 9,990 as the stop loss. And I think the stock should be heading somewhere around 11,200 to 11,300 in a short period of time.
Hi Avani, before we let you go, could you give us the your top five picks for investors today?
Okay, so basically, given the market structure, I think I'll be having a balanced view with a buy and a sell recommendation. So, given that in this entire rally, the stocks that have not gone down below their breakout levels, those are the stronger ones, and I firmly believe that CPSE sector is going to do good coming ahead also. So NTPC will be my first pick. Around 230 to 231 is a good level to enter longs, and 226.5 should be the stop loss. I am targeting somewhere around 244 to 250 levels in a short period of time. ONGC will be the second pick. I am very positive on the stock. 181 to 182 level. 180 is the breakout level which the stock had tested, and after that it went up to 192. Now, in this entire correction, the stock has come down, retraced back to the breakout level, but it has not broken that level. So, if you get the stock on dips up to around 181 to 182, it's a good buy. 178 should be the stop loss. The risk reward is very good. 192 will be the target. The third stock is from the defensive sector, which is Sun Pharma. Sun Pharma around 1100 to 1110 levels, it's a good stock to accumulate. 1165 to 1170 is what we are targeting, and 1070 will be the stop loss. And there are two stocks on the sell side. One is ICICI Prudential Life Insurance. One can sell November future if you get it somewhere around 518 to 520. And 495 will be the target, and 530 will be the stop loss on the stock. And the second stock that we are negative on is Crompton Greaves. One can sell November future in this stock in the range of 284 to 286. Currently, it is trading somewhere around that level only. The target would be 258 and stop loss will be 296.
All right, that's the view coming in from Avani. Avani, always a pleasure speaking to you, ma'am. Thank you for joining us on First Take this morning.
Thank you.